I'm going to be honest, the trends I'm about to share in today's video are not sustainable. So for example, home sold prices have increased by about 9% on a national level compared to the start of this year. And even though mortgage rates have decreased recently, they are still over 7% on average, and on top of that, rates are much higher now than they were a year ago. This has caused a giant affordability hurdle for current home buyers right now. For instance, Redfin reports today that the average monthly housing payment reached another new record high due to this increase in prices as well as rates. One of the main reasons why home prices are not crashing is due to a severe shortage of existing houses for sale, as homeowners are choosing to hang on to their very low rates. This is based on a brand new report from Redfin, and in today's video, I'm going to share all the details. Thank you so much for joining me in today's video. I appreciate you, and let's begin today's video here. Here's Redfin's latest weekly housing market update, just posted on August 31st here. This report here covers the 4 weeks ended August 27th this year. This, by the way, is their first weekly housing market update in about 3 weeks, because there was an outage of the multiple listing service in several states across the United States here. So that actually kind of provides some interesting context, because we can compare this report to about 1 month ago, and there's some very, very big changes here happening in our US housing market here. So having said that, let's talk about home prices here, because it says here the median home sold price was just under $380,000, up by 4.8% from 12 months ago. And that's the biggest year-over-year increase since October. In my personal opinion, one of the main reasons why home prices are up by about 5% on a year-over-year basis and why they're not decreasing compared to last year is due to two main reasons, as I highlight right here, due to an inventory shortage, as I'll explain in today's video here in a little bit here. So we have an inventory shortage of existing houses for sale. That's number one. And also number two, prices were falling much faster at this time last year compared to this year. So speaking of home prices falling at a much faster pace last year, here's a really good chart showing just that. The blue line is this year, the black line is last year. So last year, home prices started falling more or less in June, and they actually decreased for the remainder of the year. Whereas this year, we did see this decrease back in July, but ever since then, I should say ever since really August, home prices have been relatively flat. And now they're up by about 5% from a year ago at $380,000. Compare that to last year at this time, it was at $363,000. So in my personal opinion, the reason why we're up compared to last year is due to a very low level of the number of homes for sale, which I'll share with you guys here in a little bit, but also because home prices were falling much faster during the summer months last year compared to this year. All right, let's get back to Redfin's report here, because they actually talk about the metros that experienced the biggest increases in prices from 12 months ago, and also the metros that are down the most as well. Let's first talk about the metros that have increased the most, because this is a very, very big change here, especially compared to 1 month ago. So home prices among the 50 most populous metros increased the most in Miami, Florida, a gain of 17.1% compared to last year's levels. After that was Newark, New Jersey, up by 16%, San Diego up by 12.3%, Milwaukee, Wisconsin up by 12.1%, and Providence, Rhode Island up by 11%. This is night and day difference compared to just 1 month ago, because 1 month ago, there was only one metro, which was Miami, that was up by double digits. At that time, for the 4 weeks ended July 23rd, up by 11.9%. Only one metro up by more than 10% 1 month ago, whereas at least the top 5 metros here are up by more than 10%. In regards to the areas that experienced the biggest decreases in prices, there's only 6 metros among the 50 most populous metros that are down compared to 1 year ago. And by the way, half of them are located in Texas. So the biggest decrease in home sold prices, according to Redfin here, was Austin, Texas, down by nearly 9%. After that was Phoenix, down by 2.4%. I mean, big difference between number 1 and number 2, down by 9% compared to down by 2.4%. So Austin, Texas, prices there decreasing at a much faster clip compared to these other areas here. After Phoenix was Portland, Oregon, down by 1.4. Fort Worth, Texas, down by 1.3. Las Vegas is experiencing a decrease, down by 1.2. And San Antonio, Texas, off by 0.5%. There's a couple more things I want to touch on these figures right here, because this means that the 6 metros are down. This means, of course, 44 of the 50 most populous metros are actually experiencing gains on a year-over-year basis. So therefore, about 88% of the most populous metros in the US are now experiencing gains on a year-over-year basis. On top of that, just as I forecasted about 2 months ago, I told you guys how the number of metros that was going to be down compared to a year ago was actually going to decrease. And that's exactly what we're seeing, because 1 month ago, the number of metros that were down compared to 1 year ago was 20. So 20 metros of the 50 were down on a year-over-year basis. Now there's only 6 of them. And as I stated in previous videos, the reason for this, or the reason why I was forecasting this, is that home prices were falling at a much faster clip at this time last year compared to this year. And on top of that, inventory is still remaining at very, very low levels. Because I already have mentioned this several times in the video already here, I want to talk about inventory levels right now, because I want to mention this earlier on in the video here, because this is a very important takeaway regarding today's video, which is really the main driver regarding the trends I'm sharing in today's video here. And this is a look at the number of houses for sale nationwide according to Redfin here this year compared to last year. And what's the biggest thing that you guys see? So what I saw right here is this right here. Right now, there's around 791,000, or let's just say 792,000 homes for sale nationwide, according to Redfin, for the 4 weeks ended August 27th. Look at this though. To start the year, there was only 812,000. So by my dumb math, that's a decrease of 21,000. So we have approximately 21,000 fewer homes for sale right now compared to the start of this year. That's a decrease of 3%. Can you say not normal, right? This is because a lot of people are not listing their house for sale. That's one of the main reasons. Compare this to the same time frame last year. It is night and day difference. And this is one of the main reasons why our housing market was falling off a cliff at this time last year. And also one of the main reasons why home prices are not crashing so far this year. So at this time last year, there was approximately 974,000 homes for sale, much higher compared to right now. In fact, right now there's a 19% decrease, right? So at 974,000 to start the year, this is a very, very big change here. To start the year, it was at 648,000. This means year to date at this time last year, there was about 326,000 more houses for sale. That represented a giant increase of 50%. In other words, there was approximately 50% more homes for sale year to date last year this time compared to a 3% decrease this year. So because we have this inventory shortage of existing houses for sale, and of course because rates have been over 7% for about a month now, of course it makes sense that the average monthly housing payment on a median asking price home reach a new all-time record high of $2,649 per month at a 7.23% interest rate. That was the average rate for the week ended August 24th, according to Freddie Mac. So I want to give you guys an update regarding that, because they actually updated that today though. So Freddie Mac announced on August 31st, which is today, that the average rate for a 30-year fix for people with great credit, of course, actually decreased to 7.18%, down from 7.23% 1 week ago. According to Freddie Mac's chief economist, he stated the following: mortgage rates leveled off this week but remained elevated. Elevated is an understatement though, because last week at 7.23%, that was announced on August 24th, that was the highest levels of rates since the year 2001. So we're not too far off multi-decade lows, or multi-decade highs, I should say here, at 7.18% right now. He also says despite a continued high rates, low inventory is keeping home prices steady. And this is sad but true because we have this lack of homes for sale, which is keeping home prices from not going down at a great level here. In fact, when looking at this chart right here regarding home sold prices, according to Redfin, the peak was set back in the 4 weeks ended July 9th at 382,000. Now they're only at 380,000. And in fact, home sold prices have now increased for 2 consecutive weeks now. And when you compare this to last year this time, home prices were falling greatly due to the surge of inventory levels and also because home buying demand was also decreasing greatly as well. Okay, let's change gears slightly here and talk about pending home sales and then new listings as well. Regarding pending home sales, those are down by 14.4% year over year, continuing a 15-month plus streak of double-digit decreases of contracts being signed between buyers and sellers of existing houses. Meanwhile, every single one of the 50 most populous metros recorded a decrease of pending home sales from 1 year ago. In fact, they decreased the most in Boston, Massachusetts, down by 30%. After that was Cleveland, Ohio, Seattle, New Brunswick, New Jersey, and then Sacramento, California, down by 27.6%. This is a look at the number of pending home sales over the past 2 years. The blue line's 2023, this year. A black line is 2022, and the orange line is 2021. So the current levels of pending home sales is below last year and well below 2021 as well. Back then, there was approximately 115,000 pendings compared to only 82,000 this year. In regards to the number of new listings of houses listed for sale, that decreased by 10.4%. That may sound like a lot though, but this is actually the smallest year-over-year decrease in about a year. Part of the reason for this shrinking decrease is that new listings were decreasing at a much faster pace in 2022. And don't take my word for it or Redfin's here. So Redfin is showing here the number of new listings down by 10.4%. 1 month ago though, which is right about right there, new listings fell by 22.2%. Then in 6/30, about 2 months ago, which is right about right there, new listings fell by about 26%. So the difference between this year and last year is actually getting more narrow. And the reason for that, let me just exclude 2021. The reason for that is that new listings were falling at a much faster pace than this year. In fact, new listings have been relatively flat over the past month or so. So it's going to be interesting to see what happens here because I wouldn't be surprised to see the number of new listings be higher than last year's levels in about 1 month's time. In my personal opinion, the reason for this is that last year rates more than doubled, and that caused a shock to our housing market, and a lot of people were not listing their homes for sale. Whereas this year, we're not seeing that same shock, even though we're still seeing elevated rates for an extended period of time now. Having said that, I would imagine that the number of people listing their homes for sale will still remain at very low levels. In fact, when we look at 2021 this time, back then, which is right about right there, there was 111,000 new listings compared to only 84,000 or approximately 85,000 over the previous 4 weeks. Therefore, over the past 1 month, we're missing approximately 30,000 new listings compared to the same time frame 2 years ago. Just as a refresher, one of the main reasons why people are not listing their homes for sale is this right here. According to Redfin, this was announced about 2 months ago. About 92% of people who have loans on their houses have a rate below 6%. And again, rates are over 7% at the time of filming this video. Also, around 82% have a rate below 5% and 62% have a rate below 4%. Also, 1 of every 4 homeowners who have loans on their houses have a rate below 3%. So right now, people are not forced to sell their houses due to unemployment remaining at very low levels. And because of this, we're not seeing people list their homes for sale because they don't want to give up these historical low rates and take on a 7% interest rate. Going back to Redfin's report here, it says new listings decrease in every single one of the 50 most populous metros except for 2 of them. And that was actually in Milwaukee, where new listings actually increased by 6.1%. And San Jose, California, just south of San Francisco, saw a gain of 4.3% on a year-over-year basis. In contrast, though, in Atlanta, Georgia, new listings decreased by 32%. After that was Las Vegas, Cleveland, Sacramento, and then Riverside, California. Let's also talk about the month supply. This is a measure of the balance between demand and supply in the US. It's calculated by the number of months it would take to sell the current inventory levels. So if there was no more new listings hitting the market, it would take about 2.9 months at the current sales pace to sell all houses listed for sale. And in fact, that's the highest levels since April this year. Now, here's something I do not agree with Redfin regarding here. It says we have to have 4 to 5 months of supply to have a balanced housing market, with a lower number indicating it's a seller's market. I would say at 2.9 months, yes, it's definitely a seller's market, but I would disagree with them regarding at 4 to 5 months, we would not have a balanced housing market. And the reason for that is this right here. Let me just show the chart with you guys. The month supply is right there. So the month supply right now is at 2.9 months. Look at the month supply in 2022. Let me just zoom down right here. So back at this time last year, the month supply was around 3 months. And when the housing market was really slowing down big time, that was more or less June through August last year. And in June through August last year, the month supply was around 2 to nearly 3 months. So my question for Redfin would be, why did home prices decrease so much last year when the month supply was in the range of 2 to 3 months? Given their definition of a balanced housing market, we would have to have in the range of 4 to 5 months to have a balanced housing market, and over 5 months would imply a buyer's market. And in fact, when looking at this chart for 2022, the peak regarding inventory levels was at 4 months that was set back in November last year. To me, whether we quantify a buyer's market, a seller's market, or a balanced market really depends on where we came from. Because we have to recall here that back in 2022, we reached very, very low levels of the month supply that was set back in April and May, when the month supply was around 1.8 months. And from, let's just say, May at 1.8 months to get to 3.6 months, it was November. So in less than 12 months, the month supply doubled, and that's why home prices decreased so much. Not because we got over a 5 months housing supply, which would imply a buyer's housing market. What do you guys think about this though? Please leave me a comment below. Also want to share this with you guys as well. This is the number of houses that are selling right now, or not the number, the how long it's taking for houses to sell, I should say. Days in the market is at 29 days, roughly on par with last year's levels, which was decreasing, but has now started to increase, which is seasonal, by the way. And lastly, let's have a look at the average sale price to final list price ratio. For the last 4 weeks here, the ratio was around 100%, meaning on average, home sellers sold their houses for their asking price. Again, though, this is a lagging indication regarding our US housing market, what it was like approximately 1 to 2 months ago when the home seller accepted the offer from the home buyer. At 100% though, this is roughly on par with last year's levels as well. But as you can see right here, the ratio was falling greatly ever since May last year. It peaked at around 102.5%. But then by the time we hit the end of August, it decreased to about 100%. We should expect this ratio here to decrease for the remainder of the year due to seasonality of our housing market, but also because rates are over 7% as well. If that sustains, we should expect the stats I'm sharing in today's video to change drastically in the months ahead, but it really all depends on inventory levels as well. But please leave me a comment below with your biggest takeaways. Also, like and subscribe. And of course, share this video on your social media. I invite you to do so. Hope you guys have an awesome day, and I look forward to seeing you on the next video.